Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Ew, right? That's bad. That's bad. And look, now I didn't guarantee that the stock was going to drop today, but I did warn you about this week, and I told you about earnings. And y'all know how I am around earnings season. It can be really good, really bad, can be pretty unpredictable. But I don't want no parts of this. I don't want no parts of no company that's going to drop 35% in a day. Not to mention, the first time they announced earnings earlier this year in January, it dropped 25% on that day. This ain't it. Okay, this is not a company. It's not one of those dips that you just kind of get into and, you know, make some money. This ain't it. Okay, so first we need to talk about what is going on at Netflix. We can do a high-level overview there, and then what you can take and apply and learn for you as an investor, because there are some lessons to be learned here. The first lesson here is mind the calendar. Know what is going to happen during the week. This is why you like and subscribe and comment, because if you had watched the video yesterday, or if you watched any of the videos that I did on Netflix, but if you had watched the video, you would have known, like, you know, I'll keep an eye on Netflix, but I'm not going to invest in it, right? Because this was a risk, right? It's not a guarantee, but it was definitely a risk. You could have gotten into it yesterday, gotten into it Monday, and then lost 35% like that in a single day. That ain't okay. That's just not my style. Okay, I'm gonna lose money every now and then. It happens, but 35% a day, no sir, no ma'am. We not playing those types of games over here. Okay, but this was a known factor. Could it happen with any company? To a degree, right? But I've seen it happen consistently with one particular company. Consistently meaning I saw what happened in January, and Netflix hadn't got any better between January and now. It is likely to occur again. So I'm going to talk a little bit more about that, but also I'm going to tell you this now. I think Facebook reports next week. I can double check that in the comments, but Facebook is going to report soon. Remember, they lost subscribers, or they lost like active monthly users for the first time in a while, and they dropped significantly. Watch out for that too. Okay, not saying it's going to happen, but if it does, I would not be surprised at all. So keep your eye on that. Now, back to Netflix. Here's what you need to know. So outside of know what's on the calendar and be aware, especially if you're new and this is your first investment into it, be aware of what's going on. Read about the business, because the business usually helps determine where the market is going to go and how the market is going to view that particular stock. Here is why. I've been on record for months now, almost years at this point, about how I feel about Netflix. And I've been saying for a while, right, that streaming, that's not the wave anymore. Everybody's doing it now. Your competition has increased. I said that they should go into like hotels and themed hotels for all their cool shows, Stranger Things, Bridgerton, all that type of stuff. Kind of take the Disney model and do limited edition stuff like that. Do merchandise, because that's how Disney makes a lot of money too. And they did start to do that. I don't think they started to do it soon enough, but at least they started, right? But here's the thing, they lost 200,000 subscribers in the quarter. That is the headline news. That's what everybody is talking about. But I think there's an asterisk there that everybody is not really discussing. So let's talk about that as well. So we're gonna put that on the side real quick and we'll come back to it. But like, business-wise, you got to see this from a strategic point. Do you want to invest in a business that only really has one stream of revenue, one basic stream of revenue, subscriber only, and that's it? And in a place where we're talking about supply and demand, that's what economics is all about. Well, at the time, there was a huge demand for streaming service, and there is, but the supply was really only Netflix and Hulu. I mean, that was really it, right? You can throw YouTube in there if you want when it comes to like just free user-generated content, but for produced shows and stuff, it was really Hulu, Netflix. That was it. One had ads, one didn't. And that was the whole streaming game for years. Then you started having Disney Plus, Paramount Plus, HBO Max, Quibi, and then that died. I'm trying to think of all the ones I can just easily conjure up. You know, ESPN's got their own little streaming thing, CNN Plus, which nobody watches, but that's out there. You got all these little streaming services popping up for all these little providers, and now, right, the supply and demand is off. The supply is high. That demand is lowering. It is evening out, and people have to decide, do I stick with Netflix, who I know is raising prices, or do I go with one of these bundle packages like what is it, like Disney Plus, ESPN, and Hulu? I can get a package deal there. Or do I just, you know, stick with something like Peacock Or do I go with something like a YouTube TV, where for a higher price I can get way more channels and way more movies and things like that? You have to decide. Or, right, these all the streaming services that I'm just instantly thinking of. Or could you go with something like an Amazon Prime, right, and get that membership and buy my groceries and buy whatever stuff I don't need and watch movies and shows? That's a lot of stuff that you have to contend with that Netflix did not have to contend with, what, 7 or 8 years ago. The game, the landscape has changed for them. And that is what I need to know as an investor for any company that I have. Not just Netflix, but if I'm investing in, let's say, an Amazon, if I'm investing in a Shopify, how is the landscape changing? If I'm investing in Apple, is there a new, Samsung waiting out there in the wings? Are people, treating my services different? Like, these are things that I need to know. So Apple is fine, Netflix maybe not. And speaking of Netflix and streaming services, I forgot you got Apple TV is out there too. Like, everybody is coming for the Netflix game. And unlike Apple, right, and unlike even Roku that also has their own streaming service, unlike Apple, I have to have a phone, and Apple Plus can just comes with it, right? And I may decide to pay for that or not, but I'm already here, right? If nobody gets Apple TV, I still got the iPhone. They're going to get their money from that. They're going to get their money from Apple Pay. They've got other options to pull from very, very easily because I already have their device in my pocket. Netflix doesn't have a Netflix TV, right? That's why I like Hulu as a company, not necessarily as a stock. It's because Roku, I got the TV. And I may continue to buy the TVs, and they can make whatever additional money from streaming if they want to. Netflix that's it. All you got is streaming. And they, again, I talked about, the hotel experience, which I thought they should go into. They're going into retail and clothing and stuff like that, which I also suggest they should do. Should have done a long time ago. Because now you're grasping for straws. Now you need that other type of revenue to diversify. And they had not made those moves earlier. Concerns, right? Again, business and strategy does feed into how the stock does perform. So all that stuff goes into Netflix and things that you should learn, not just from, hey, the chart says this, oh, the balance sheet says this, and just go with it. It's also, how is the competition, right? How are people treating the product and using the product compared to what they used to maybe 10 years ago? How has the entire environment changed? And that is something that you want to apply across the board, but obviously it's something we can learn from Netflix. Now, back on to the subscriber part of it, which we can pick up and talk about now. The headline is they lost 200,000 subscribers in this previous quarter. That is a bad number. It's the first time they've lost subscribers since 2011. But there is an asterisk that I don't think enough people are talking about. Yes, you can say it's because of prices. Yes, you can say because Bridgerton Season 2 wasn't as good as you thought it should have been. I haven't watched it. That's just, like I said, I'll be listening. I'll be on the internet. That's what y'all be saying. But aside from that, the other part is they lost 700,000 subscribers, or rather let go of 700,000 subscribers in Russia. They said, we don't like what's going on. We are going to, really just cut that region off, and we'll deal with the consequences. Today is a part of those consequences. So in essence, you lose 700,000 subscribers, you get however many subscribers they got, and ended up still being negative. So I guess they gained, 500,000 subscribers, and they're still down. They're still negative 200,000. Again, first loss since 2011, which is not good for them. It's not good for any company to lose subscribers, but that's a part of it. Had they not lost 700,000 subscribers from Russia, then I think the headlines will be different, and perhaps they wouldn't have saw the 35% dip that they saw. The other thing, right, there's a lot of issues here. The other thing is Netflix is also suffering from people sharing passwords, and that is costing them close to $6 billion with a B every single year. That's something that they are concerned about, clearly, and that's something they're going to have to fix. So between higher competition from everybody else, Russia definitely hurt them. Then you've got password sharing and spending more money on content at like $50 billion a year, or last year rather. All of those things are factoring into what's going on. This is why, as an investor, if I'm choosing to invest in an individual company, these are factors like that I need to know. And you can see how somebody can make a mistake. When you don't know that they cut off streaming to Russia, when you don't know that, which I feel like you should know, but if you don't know that, hey, Apple Plus is a threat, Amazon streaming service is a threat, Disney Plus is a threat, if you don't notice all these serious threats cropping up, then you might be running into something, right? You can do what I say is take a long walk off a short cliff, thinking Netflix today in 2022 is going to be what Netflix was, let's say, I don't know, 2010 or 2015. It's not. The game has absolutely changed, and Netflix has to evolve, right? They definitely have to evolve. And when you take this blueprint in of like supply and demand and evolution and change within business, you can start to see and translate that and say, okay, I see what happened in Netflix. Let's pick it up. I also invest in Tesla, who also reported earnings. What can I learn? What lessons can I pull over? Now remember, obviously streaming, cars, they're not the same thing. Okay, they're not the same thing. However, the supply and demand thing is the same. That's going to translate everywhere. When I look at Tesla, I'm not as concerned about Tesla than what I am with Netflix. But there is one principle. When we talk about supply and demand, just like Netflix succeeded because there weren't any other big players for the most part. There weren't many, especially before Hulu. Hulu was doing its thing. It didn't have quality movies. It had commercials. Netflix was, I'm gonna send you whatever shows, no breaks, no commercials. You watch it. We got all of it, right? That's what Netflix's primary value was. And then the game changed, right? Well, Tesla is right now the premium luxury electric car brand. And you really can't name that many that are out there that are able to compete on the level. Yeah, Revlon is out there. Today they're not really doing much. Yes, Ford and GM. I got shares of Ford. Ford is out there. It ain't really, you don't see that many of them. You do not see a whole bunch of electric Fords like you do Teslas, depending on what neighborhood you're in, I guess, right? And at some point, they are going to catch up. Now, are they going to catch up to a level where it threatens Tesla, where Tesla's going to drop 35% in a day? I don't know. I can't sit here and tell you that in confidence. We will have to see. But what I can tell you is you can be out there and be innovative for a while and be the only one and the primary one in that space, but things do change, and you have to be on top of that change and be on top of seeing some of these things happen. We talked about Netflix months ago. I've said on the podcast about what my concerns were. I talked when they raised rates. I talked about those. I talked about how, like, hey, y'all got to do something different. Y'all were a pandemic stock. Y'all were good before, but y'all a pandemic stock. But Disney Plus is coming for you, right? Paramount Plus, HBO, Apple TV, whatever streaming service I am thinking about and have not mentioned already, they are coming for the pie, and consumers have to choose. We as consumers are not going to buy up every single streaming service and just go blindly spending money. We're not doing that, because and we're not doing that. So remember, like, I know this is a bit of a rant, but remember, like, all this stuff goes together, right? All this stuff in economics goes together. The reason why I'm not going to just spend on every single streaming service out there without looking is because gas prices are higher. Inflation is higher across the board. My taco truck is higher. Like, I ran by my taco truck. But everything is higher. And when I see Netflix is higher plus everything else, I'm going to be value shopping. I might have to let some streaming services go. Because right now, my kids care about Sesame Street, which is not on Netflix. I watch Disney Plus shows. I've been watching Moon Knight. That's not on Netflix. So what do I need Netflix for? Right? You're not catching me. So it's just a facetious example, but you get the point in that all this stuff is connected with inflation, with interest rates. That doesn't help tech companies. Competition, supply and demand, all of that stuff does matter, and a lot of times they show up on earnings day in a big way, which is why I did warn y'all and talk about it in advance. All right, so that is it for me. I know it's more of a rant, I'm sorry, but I saw the headlines like, ooh, this is bad, but you should have saw this coming. And I've been talking about Netflix for a while, so you want to like and subscribe. Those who have been watching the videos every day, and those who have been subscribing, y'all know that. We've talked about it. All right, that's it for me. I'll talk to y'all tomorrow. Bye.